Welcome in, everybody. We are here for yet another Market Power Hour. Heated Market Power Hour. Josh is already throwing the mud. We got mud flinging. He's fired. As you can hear, Josh is fully torqued and like aggressively long right now. So this pullback is affecting his demeanor. I'm just kidding. No, but welcome in, guys. We're happy to have Josh and Schmitty, and we're going to talk about markets. And honestly, I kind of have my ear to the ground, and I think a lot of these other guys do too, about analysis of the markets, whether it's through mainstream media or even niche stuff or podcasts or whatever. I think the three of us do a pretty good job against anybody globally, and I think we do a good job providing like some at least free insights to everybody, and that is our goal, is NFA and all that stuff. But I think we've been closer to the target than most over time, and I think we do a pretty decent job of it. So thank you guys for being here. Thank you for setting time aside for this. Anything y'all want to lead off with before I jump into charts and stuff?
No, I've been gone for a few days. Watched the eclipse, aka bunch of clouds.
Yeah,
I didn't see the sun, but
I didn't either.
I was checking every now and then. I see Jack bear tweeting. I see a bunch of other people bear tweeting. Like, okay, let's go. I mean, we moved like plus or minus 3K. Like, okay, yeah. All of a sudden, everybody gets super bearish.
Dude, I made that comment earlier. I was like, we're over here talking about like bear setups and stuff. We're almost 70K still. Like, what are we? This is crazy. I feel like we live in La La Land.
Yeah, a little bit. I mean, some people, they have trouble holding on to positions. They have trouble managing multiple types of allocations. I don't know. You got to learn this stuff over time. But yeah, is it smart to be 20x long here? Probably not. Probably not.
Fair enough.
So let's hear it. Let's hear it. I'm ready. I'm ready. Fully, the spirit is willing to absorb your bearish argument.
Okay. Thank you, Josh. By the way, thank you for your
Oh, you have a hat and everything. Look at
that. All right. Yeah, let's get into it. Okay, so I will give my case for what I'm seeing, what I anticipate, and all that stuff. Let me get two things pulled up here, and then we'll rock and roll.
The funny part to me is I think Schmitty is going to come back out with a bullish Wyckoff argument, but I could be wrong.
Okay, so let's get into it. Bottom right, there we go. Change my scene here. So am I bearish right now? Yes. Have I been bearish for a few weeks? Yes. And really the cause of this bearishness for me is the similarity to this distribution schematic. And this is not a conversation about like, oh, I'm holding this cookie cutter mold of a thing. It's like the state of Nebraska, and I could fit it right over the price action, and therefore I need to do the thing. It's not about that. It's about, we have like 10 check boxes of things that, what does a top look like, or what could a top look like? And we're slowly moving down the list, and we're checking more and more and more and more things as we go down. So let me just, big picture here, let's kind of zoom out. First things first, Bitcoin currently sits at what, 68,700. Okay, about 15 months ago, we were $15,000. Bitcoin has had a monster bull run. This is whether you condense that and say this is a impulsive low time frame run, whether you say this is relatively a long time frame because it's over a year. I don't care. But what I see is you have a period of absorption or accumulation. You have a sort of reaccumulation. You have a sort of continuation. And now you're having these kind of worrying signs. So you had your accumulation, you had markup, you had another form of markup. And all that time we've literally gone parabolic. Like by no matter how you dice this thing up, we've gone parabolic. So now it's an interesting time to see a bit of a slowdown. If there was a moment for distribution to occur, this would make a lot of sense for that to be the case. Now, the obvious elephant in the room is, guys, we're like a week and change from halving. So this is not like some exciting thing for me to come over and be like, oh yeah, look, I think we're looking at distribution. I don't like that. I feel like a jackass every time I talk about distribution and we're a week from halving. I know how it sounds. I don't make YouTube videos regularly. I don't put out like TikTok comment. This is not just some statement to go viral. I don't care. I'm just laying it out how I see it within the charts, on the charts. The thing that specifically draws my eye to distribution within the context of a top is that within distribution, don't get caught up in like the specific, oh, here's the BC and here's the sign. What big picture, what distribution is a trade range is formed. There are impulsive breaks up and like above and below. The best form of distribution you'll see is an impulsive break below before the impulsive break up. Which is effectively what we've seen. And then basically everything after that is a attempt to break out again. It's like everybody is craving that hit, that dopamine hit. They want the old days, and they're trying and they're trying and they're trying, and it just can't happen. And next thing you know, it all gives way and we cascade to some level. Now, I have two target levels that if this is distribution, the confirmation of distribution is when I put this on the wall. I have a little, like a ball sitting over there. That is reserved for when we are in a confirmed bull run or a confirmed bear market, you know, within the context of whether we've come out of accumulation or we've just left distribution. This goes on the wall at a close below 60,000. Okay. So this is, in my mind, that is when distribution is confirmed, is with a break below here. Now, the thing is, we have seen instances of Bitcoin go through distribution, go down to some target, whatever that is. Maybe that's, you know, like I'd say between 50 and 36. That's 50 is basically a stop run from anybody who is a late long. Imagine everybody in here with stops below this level, they all get blown out. And then we go to the moon, and then we go to 100K, and then we go to 120, whatever. So just because I'm talking about distribution on the eve of the halving, don't get it twisted that I'm talking about like a 3-year bear market following that. That's not what I'm saying. Distribution has a price target. And we have seen Bitcoin do a thing where it breaks down from confirmed distribution. It spends like 3 months going sideways at some level, and then it goes back, like it continues and makes new highs. It goes on to do the next thing. So even if this is confirmed to be distribution, that is not the time to panic sell and you know, margin short and all that kind of stuff. Honestly, if we find ourselves between this 50 to 36, that's when I'm margin long. Like I am looking for a long opportunity down in here. So when it comes to my style of trading and analyzing the market, I think of it in terms of like a decision tree. So I have this whole path of the decision tree where I'm like, okay, this is the bear case. And here's what I would expect. Here's what I would expect. And then what would I do as a result of that? Like long 36 to 50,000. Like that's kind of the net. That's where this all trails to. I want to be a buyer down in this level. I want to close my longs up in here, which is what I've basically done. Like my effective sells are like at 70, let's say on average. And so I want to reload at 50 to 36. If I have an opportunity to double my Bitcoin stack before the next leg up, that's a massive win with no leverage. That's a massive win. So that's like, but I understand that's kind of pie in the sky. So within the context of a decision tree, what's the other side of the trade? What does the other side of the tree look like? How do I know when I'm wrong? When is this whole bear thesis, when is it invalidated? So for me, there's one of two things can happen. Option A, we can break up and consolidate and, you know, go on to get above this 71.5, close high time frame up here, close above here, whatever. And then I have to flip bullish. That is like I am forced to flip bullish with several high time frame closes up over here. That's like a very in your face, like the lady walks right up to you and just slaps you across the nose. That's kind of that situation. A much more nuanced option would be some sort of breakdown that reclaims this particular, you know, this wedge. Another example is if we find support on, you could tell the market really enjoys this level right at 68.5. If this spends several days here and then rallies back up, basically the market's way of saying like, look, we lost. Well, every time we break this level, we give a lot back and then a little less and then almost none. And then up we go. I got to listen to that. I need to listen to what the market's saying. But I think the much more interesting situation would be a breakdown and then a reclaim of the range. All of a sudden, any sort of distribution talk, I have to rethink it, because we had our opportunity to break down to these, you know, ultimate lows right here, and the market said no. In fact, they used it as a liquidity event to shake out any late longs. You know, at the billionaires are adding to their positions, like something like that could be very, very interesting. So it's not like I'm at a loss to the bullish setups that could occur. But at this moment, I'm still leaning a particular direction. One other thing I do need to point out, though, is that this, you know, as Schmitty referred to it, the ADIQ pennant, which is, you know, like we had a leg up. We've been in this pennant for 45 days. And then it looked like we were breaking out. And that was a great start. Man, that was a great start. But now we've given it back and we're back in the pennant. If you're a pennant trader, you're almost immediately expecting this. This sort of like maybe like a failed rally, and then ultimately, you know, giving it all back, because that's just what happens. In that sort of situation, you would expect a visit to the pennant lows. And Schmitty, I'm probably taking some of like what you're going to talk about. Schmitty's been all over this on his Twitter. I had it pulled up earlier. I was showing chat, but basically it's hunting liquidity, and I'll let Schmitty get into that more later. But some sort of liquidity run like that is perfectly fine. And I think, on the flip side of that, the 4-hour RSI has been extremely interesting to me within this range. It's been a really good top indicator for like the Pico top of any particular impulse. So anytime there's been some sort of impulse, wherever the 4-hour RSI goes above, you know, whatever this default is, 70 or 71, that's been along with parabolic price action, that's been a really nice indication that this is over. And we had that with the breakout. So that was one of the things that I was pointing out on stream and talking about, was like, I don't know, this does not really look like what I would expect for like continuation. But what would be very interesting here is if, imagine we come back down and then break out a second time, resetting the RSI at the same time, because these bottom ticks have been really good buy signals as well. So there's two sides to this coin. It's like, even though these momentum indicators can show you when something's overblown or overbought, it's the same to the opposite side as well. So I'm very much paying attention to what happens both with respect to these trend lines, the number of horizontals that we're paying attention to, and then also some of the key momentum indicators as well. All right, thoughts, gentlemen. What do you think?
I thought you'd be more bearish than that. That's not bad. I think we can all agree that we're probably going to see sideways or down for the next 2 weeks, over up. You know, if I were to look at probabilities and to have like a downside protective mechanism, whether that's cash, whether that's long DXY, whether that's yielding, whether that's short, you know, I wouldn't short any of this personally, but
yeah,
like you're saying, if you have the opportunity to nail this trade for the downside, add to your stack, that's a win. If you're mining fiat and you're DCAing every 2 weeks, that's a win on any, you know, price going down. And over time, it shouldn't matter. You know, this is what I tried to argue yesterday in a YouTube video I did. It just doesn't matter, because long term, this should go up. Okay. So like, yeah, like, you know, we're here, we talk about this stuff every week, every day, every week. And so we go to 50. Okay, like who cares, right?
It's still
like
$50,000, still a Camry.
Then it's just a better multiple on our way to 300K or whatever.
Yeah.
I'm more concerned with legacy, and I'll talk about that, but this doesn't look as bearish to me as legacy potentially looks.
Yeah.
But I agree that the schematic, distro schematic there looks pretty good.
So I'll pass the baton here. I want to point out one final thing. A lot of my hesitation with this entire range, the smell in the air to me of distribution, is that if this were distribution, you'd expect two things. One, you would expect all the secondary and tertiary things that are they kind of accompany a Bitcoin bull run. You'd expect them to show signs of exhaustion, signs of a top, etc. And number two, you would expect a parabolic alt season, basically across the board, or at least with like an entire segment, like a large segment. And so when I look back at this and I look at stuff like Bonk, I look at Doge, I look at WIF, I look at Pepe, you know, there's been all these things that have Sol. They've had parabolic runs. I mean, Sol, for God's sake, was like, what, $10 to 200?
Yeah.
And that's not even like a, you know, brand new altcoin or something. Like these things. And not only that, but they've hit their targets. They've hit targets we've talked about for literally a year and a half. And then we look over in legacy land, you got stuff like MicroStrategy. I closed $200 longs at 1,800. This is crazy. I have no business making that kind of return in the legacy market. But
I agree. And there are people still on MSTR, like, again, over the long term, yeah, this can go to infinity. But we're talking about the next 2 weeks, the next month and a half, whatever it is. That chart looks like shit. It looks like dog shit. It looks like horse shit.
Like, how are you going to tell me you're going to all in long this? You had all this opportunity, and you're going to wait to the legacy. Come on.
Yeah, there are so many legacy charts that look like Head and Shoulders and or inverted Adam and Eve.
All I see is back in time parabolic meme. I'm trying. I can't even fit it. I can't even get it on there, and I'm in log. Let me go to linear.
No, there's just no argument to be adding to anything up here. I think the pitchfork on MSTR is like 1,000, where the midpoint is.
That's so 50% retrace. What?
That low
from here.
The current low in fibs. No, sorry, the today's low. Today's low.
And what to high?
Yeah. What's the 1,618 on that? 1,000.
Yeah, like 1,000.
Like 1,100.
I call it a stop run for these guys.
Just go to 1,000 at this point. Yeah, exactly. That would make total sense.
Yeah. Well, yeah, like a 50% retrace after it ran. Let's measure this.
Yeah, what's the 50%? Even from February to now, like any of those points would make sense.
Okay, February to now, price ran 350% in 64 days. So 2 months, 3.5x. And people want to act like down is illegal. You can't do that.
Well, that's my argument for all these alts that are up 2,000% in 6 months. It's like, guys, how much more do you want? Like,
yeah.
So you missed it and you want more, and now you're late, and now your exit liquidity. Sorry, you're wrong. but yeah, that's probably going to go down along with everything else.
So where it's going to get really interesting for me is, so here was my trade for MSTR, and then I swear I'll pass the baton here.
I want to put you on the spot after you talk about this.
Okay.
One more thing.
Okay. Eiffel Tower. Big explosive move. Big move down. I have a lot of tweets where you go back and search, but I made some comment like, if you love MSTR at 1,000, you're gonna love it at 500 or something. And people that rustled so many jimmies. And then we came as low as like 130, right? Like this is just what this does. It goes up fast, down fast, consolidate. So the reason I'm pointing this out is, man, I'm sitting here scratching my head like, I don't want to see this again. But maybe we see it again. It doesn't make sense. The halving's a week away. What are we doing talking about even like these top patterns and stuff like that? But so we got to see. I am praying for some sort of macro support to be built. I don't know what it'll look like for the next leg up. I don't know if, wedge or inverted head and shoulders. I don't know. I don't know what it'll look like. But what I see is a massive parabolic uptrend that is at risk of breaking, and any sort of break is going to get nasty. But I'm not shorting this. This is the last comment I want to make, is that even though I see a setup, I will never short Bitcoin leading into the halving. It ain't happening. Most I'll do is just cash the sideline. Done.
All right, one more thing before you change screens.
Okay.
Putting you on the spot. So early 2022, like February to April on Bitcoin, did you consider that distribution at the time?
Early 20, yeah, redistribution.
Okay, so the only reason I asked that is because we have a similar situation. So back then it was Anchor buying BTC for their reserve, and almost immediately that thing exploded. The reserves got utilized to some degree, brought us lower, right? Everything sort of exploded. That was May 13th or whatever that was. That was when Anchor exploded, right? we have a different product, but similar in some ways. Okay, I know Athena is not Anchor, just to be clear, but they did buy $500 million of BTC the other day. When we shot up there. It is hedged. It's a complex thing. It's basis arbitrage, yada yada yada. But it would be really interesting if, in the same vein, with this like sort of complex market thing going on, that they have to quickly unwind that. Like I have to draw a potential path to how we get to 50 if we go to 50. It's like we need legacy markets exploding. We need some crypto native stuff to explode. It's going to take a lot. We need flows to come out of the ETFs, which we haven't really seen other than GBTC. So those are the things I would be looking for. Is if Athena randomly gets angry, and if legacy explodes, if flows come out, stuff like that.
Dude, I'm over here playing video games. You know what I mean? Like I don't keep up with any of that stuff. That's crazy though. That was also actually something happening.
But that was also a ascending triangle at the time, which just makes this kind of interesting.
Yeah, right here on this breakout, I put out a tweet. I tried to find, I can't find it, but right here on this breakout, I put out a tweet because what I did not like about this, and I talk about this a lot, even on kind of like the lower time frame, but anytime you have these kind of like progressive stair step up, these after an impulsive move, a campaign to the downside, a series of higher lows, that always makes like my spidey sense on my neck tingle, because I mean, that's what's behind a rising wedge, some sort of like bearish pattern. That's what's behind a bear flag. It's always that kind of stuff. Now, there's these scenarios where you have kind of equal highs and these stair step lows, and Bitcoin bottomed just in this fashion. What was it back here? Like that's literally what this bottom pattern looked like. So you got to kind of like marry together how far down are we from the all-time high. Are we at like max pain? What's going on? But back in this moment, we weren't even back to like this. There was this key horizontal right here that price loved to spend a lot of time at, and we didn't even touch it. And to me, that was the biggest red flag in the world. And I remember streaming and talking about it, how this to me looked like redistribution, because I don't know if you've actually seen the redistribution schematic, but here I found it. It's this. I mean, this is what you expect. So all I was focused on is if we close back below this horizontal, you better run. You better get out of Dodge and fast. This is not how bottoms look. You don't fall short of a key horizontal level that we spent a year at, almost 2 years at. You don't come within 20% of it and then just kind of sit here and do these kind of like weak little breakouts. Because if we start coming back in here, that's GG. And then as soon as we did that breakdown did not stop until we bottomed. Like this was the pit stop to me. But to your point about like, what could be a bullish situation is, imagine we do something like, if I just invert this is perfectly fine with today's price action. Like if we're doing some like bearish things, we have a level, if we come down and break that level and then come back, that would be really, really exciting for Bitcoin. So focused on like today's price action.
What's interesting too about that early 2022 period is that ETH was much more bullish than Bitcoin in that specific time window.
Mm-hmm.
And that kind of reminds me of Sol here, not here, but I guess over the past couple of weeks, that Sol had been much more bullish than Bitcoin.
This is chat just linked this. I'd forgotten about this one.
Yeah, looks great. And something else there on the cloud, it also broke through the cloud when we broke that diag to the downside. So anyway, there was lots of stuff. Rates were coming up. Inflation was out of control. I mean, there's tons of reasons why we were breaking down.
Yeah.
Sound familiar, chat? Sound familiar?
Where have we heard that before? All right, somebody else take over. Who wants to go next?
No, that was good. Schmitty, you there?
Yeah. I'm just listening.
Oh, okay. Be quiet as a church mouse. Do you want to go next just because you're closer to the Wyckoff stuff? I'm ready if you don't want to go next.
Yeah, go ahead. I have a lot to say. So
Okay. You've disabled screen sharing.
Oh, it's like default off. Sorry. Share. Okay.
Yeah,
Go
we know. You just want to hog all the screen time for your
Taking it
bearish
all.
arguments.
Hey, and chat, by the way, usually we keep this to an hour, but I think today is so important. I'm not going to like hold us hard to that. So suck it, chat. You might get more. You might get a little bit more.
I can be fairly quick. Today we had a CPI print, 8:30.
Hold on. I got to get your screen pulled up. Make sure it actually shows properly.
There he is, back to the bearish stuff. He just doesn't want to hear it.
All right, settle down.
All right, so we had the CPI print today. Markets got very angry. CPI was hotter than expectations, aka higher than expectations. There's been this growing sense of inflation is sort of done going down, and this is the new baseline. And the Fed is sort of taking the opposite stance, like, oh, we've only had a few months of bad prints, and it'll keep going down. That's perfectly possible, but that's not what we've seen so far. So we're kind of risking stagflation at this point if we've got rising inflation and upcoming rising unemployment. So that'll be very interesting to watch over the next year into the election. But these are not good numbers overall. I know this is like, past 5 decades or whatever this is, but to see inflation coming up again is not something that is bullish for risk markets. Remember earlier in the year, we were pricing in 6 cuts for the Fed. Now they're pricing in like maybe 2. Here's another look at the year over year categories. A lot of this stuff is still rising, right? And now we also have gas and fuel oil, that sort of stuff, slowing down less fast, aka rising on a month-over-month basis. So all that's very bad for inflation, very bad for rate cut expectations, and very bad for anything that is rate sensitive. Previously, things like altcoins, things like IWM, things like low caps have been doing really well on a relative basis just because there was this expectation that rate cuts were coming sooner rather than later. And now with inflation rising, those expectations are being pushed further and further and further. So this is the meeting probabilities. These are the dates on the left here that the Fed meets, and this is the probability of cutting, holding, or raising rates. And the percentages here just show like the odds at which we would be cutting. So currently there's not pricing in a cut until September, which is much farther back on the calendar than previous expectations. So all that is just to say, look, high inflation is bearish for risk. Crypto is risk. Meme coins are risk. Alts are risk. Any of that stuff, I wouldn't expect it to do well in this environment at this point.
Can I share an anecdote real quick?
Yeah, go ahead.
It's just applicable. So I work with some finance groups, and there's a group I'm with that's looking to buy another finance group, and so they're sort of like an eBay of finance companies for sale, and they've been going through them. And a lot of these, they work with banks, or they're in some way like kind of entangled with banks. And over the last, let's say, 1.5 to 2 years, maybe even 3 years back, the Fed was like, hey, we're not raising rates. Boom, they raised 5 times or 6 times, whatever it was. But they were making hedges. They were making bond plays. They have these bond portfolios where they're betting on no rise in interest rates. And suddenly they're on the wrong side of that trade, right? Because the Fed came out and just did it. So they have been praying to get a better, because their portfolios are so underwater right now. When they go to sell, you have to discount them for whatever that unrealized loss is. And that unrealized loss gets less bad, gets a little bit better if rates are cut. So if the Fed will cut rates, a lot of companies can breathe this sigh of relief. And so I've been hearing it all year. Oh, well, you should pay us a little bit more because the Fed's going to cut 4 times this year and that will improve things. Oh, well, and then it turned into, hey, they're going to cut 3 times this year. And now it's like, well, they're going to cut 2 times. I'm wondering if they just don't cut at all, or maybe only once, something, because you talk about like a Max Payne scenario, there's a lot of big money kind of tied up, and everyone's like, well, I can just hold out until this event happens, and then I can, do what I want to do. So anyway, that's a little bit anecdotal, but that's like a real world thing that I keep hearing over and over and over again.
No, I mean, you're 100% right, because that's how SVB blew up, right? They were super long on the long end of rates, and then rates went up, which means prices go down, and then they were underwater on everything, and then people wanted their money back. They didn't have it.
Wasn't
That's
there?
how
Yeah.
SVB blew up.
Yeah.
So yeah, anything that's rate sensitive, which is why it's important to, even if you don't really understand what's going on here, to have some idea of what's going on here, because alts are going to struggle in this environment. So something like Bitcoin dominance is going to do better, at least it should do better. Any large cap should do better than something way down the list. So all that just feeds into this bearishness that we generally have. I'm not like a bond expert or a yield expert, but to see yields rise today, this is yields basically since the beginning of the year, week over week, and to see yields on the long end and the medium end, the belly of the curve rise as much as they have today, can't imagine that's bullish for risk assets. And I think it's just
probably why
another
gold's doing so well too.
Mm-hmm.
I think it's just another reason why like it's easier to take profits here for people and get a yield and worry about like where to buy later on a move down, or maybe they buy higher, but again, it's downside protection for whatever might be about to happen. Like if we're looking at the S&P with the cloud, this thing has been bull only since November, and on the daily, it's finally starting to roll over out of this channel below the Tenkin. Momentum is clearly done at the moment, right? And what I'd watch for into May would be a potential bearish move through the cloud here to 4,800. And if we see that, I can't imagine crypto's too happy about that. But I guess it depends in the context at which that happens. And that's, if you're looking for reasons for downside protection on crypto, it would be stuff like this. If we get some sort of meltdown on the S&P, which realistically wouldn't be that big of a deal, but it would be treated as the end of the world. We're going to prices back to February. Okay, it's not like this is some huge drawdown, but it's just we've been bullish for so long on everything that this is going to be seen as very, very bearish. And if we look at two individual names in particular, NVIDIA and SMCI, these things have, much like meme coins, just gone into the stratosphere, right? And up here at this point, again, I don't want to short anything, but I'm tempted to take, I forget the ETF. It's like NVDS, I think, or SOX, which is the inverse chips ETF. Anyway, both of these inverted Adam and Eve, head and shoulders pretty clearly on SMCI to me.
Yeah.
Both of these look very heavy up here. Very, very heavy. NVIDIA is actually up today, but I wouldn't want to be long on this. I wouldn't want to be adding to any positions on these. Definitely would be taking profit on stuff that looks like this. So if the chip stuff that's been leading the market and helping buoy the S&P, if that starts to roll over, where else is there, do we get help from? Because it's not going to be banks, KRE, the bank stuff, that stuff's going to get hurt like we talked about a little earlier. So I don't really see much bullishness in legacy other than commodities, which look great. All right, let's talk about crypto for 5 seconds. So no, Jack doesn't like ETFs flows, but we do have a Bitcoin ETF potentially coming next week in Hong Kong. And if you've been following any of the news with the gold ETFs in China, which they had to close because people wanted them so bad, aka capital controls because of failing Chinese options for investors, essentially, we may see something similar with Bitcoin ETFs. And that may help destroy the distro stuff. If there's some like oddball thing that could be happening, watch for that. So that's potentially coming within the next couple of weeks. flows in general on a weekly basis have been less exciting than they had been weeks prior. I'll say it like that. Muted, down, kind of flat, right? And it makes sense because we're not really seeing anything in price. So if we break 74 now or later, I would expect flows to pick up again. I would love to see us go to 60 or whatever and flows come out of this stuff. I would love that. Because then we get to see what happens, right? So far, we haven't really seen, what do outflows look like other than GBTC. But flows have been pretty quiet. One good thing about this rally, let me just show 3 Glassnode charts real quick. One of the only newsletters I read every week is Glassnode. They're not a sponsor or anything, but they just have really good charts.
They have good, yeah, I'd second that. They do a really good job on stuff.
The rally, especially later on, this actually hasn't been futures or leverage pretty much. That this is their argument here, that spot volumes have been very, very high towards the end of this, which maybe you could say is this is euphoria. This is, the last leg of the initial parabolic move. But I see this as a healthy thing in general overall to see spot volumes way up. CVD, which isn't really something I know much about, but CVD was also very, very positive, kind of similar to the end of February 2021. So maybe we need to see this stuff all sort of reset, right, and settle down. And then this is bull market correction drawdowns. Again, here they're sort of arguing that thus far we really haven't seen a drawdown, right? Which we haven't, let's be honest, right? So we could see 25 to 30%, I think, pretty easily, should we choose that direction.
I went over that last stream, by the way. I actually went back week by week, and it was something like you could have 3.5x leverage or 4x leverage and buy any top over the last 15 months, and you were not liquidated at any point for Bitcoin specifically, which is crazy. There's never been a time like that ever.
Yeah, it has been quite the free ride for Bitcoin. And then, we talk about alts. It's been very much a free ride for things like Sol or meme coins or Bonk or whatever else, right? So there's an argument that, maybe we're due for the big one, right? We're due for the big earthquake or whatever coming up here. As far as Bitcoin itself, the easiest trade is always going to be on the long side. It's always going to be 2 things. It's either going to be a bullish breakout from a bearish cloud, which we had in October, or it's going to be a bullish TK recross with price above cloud, which we had in February. Up here, we have neither of those things. So from a ease of trading perspective, it would be better for everything to just get angry, reset, go flat, go to 60 or less, whatever, right? That's good. That's going to be the easier trade, just to get everything to reset again. And just as a reminder, in June, that's when we got the BlackRock news. Even with that, we still rolled over. Like, that was, for many of us who were paying attention, like, that was a huge, huge BlackRock ETF application. Like, of course, this is going to get approved. The market was in denial. It didn't really matter because we still pulled back. So the argument here is the easiest trade for the technical perspective is going to be anger, flat, sideways, moving averages reset. We'll probably get some sort of massive Bollinger Band squeeze eventually up here. Whether or not this is an equilateral triangle or an ascending triangle or whatever, I don't think it really matters, because much like that February 2022 example, I don't know if the support is going to hold, the diagonal support. If you were to measure this on the downside, you do get in the range of 50K, 50 to 54, I think it is, something like that. We've got tax day on the 15th. We've got halving on the 20th. I almost think what we're going to see is an attempt to break 60, a failed attempt, and then just like send it slowly over the next 8 weeks back to 74 plus. And that's kind of what we've seen historically post halving. Is the date itself isn't important. It's the 2 months after, the 3 months after. That's when things start to get cooking. And we've just sort of pulled all that forward ahead of time. So we're definitely way ahead of schedule, as we've talked about before. But the cloud here still looks fine. It's not bearish by any means. But if we get a bearish TK cross up here, that is definitely a great sign to jump out much like the S&P on the daily, if you get a bearish TK cross up here at 51, 52, that's a blessing telling you just get out, get out, get out, get out. But we're not seeing that yet. Okay, so there's still a chance for bullish continuation. It's just there's no real trade here, What do you do? What do you really do? There's nothing telling you to add. There's no real stops getting ran either, realistically. We're still in the range, right?
You had that fake breakout. That's kind of the last thing you can really lean on.
Yeah. And the other part of this is if GBTC and or Berry Silver are unloading at any all-time high attempt, which it looks like they are, in a bigger degree, we broke 71 and they unloaded 300 million, right? So if that happens continuously here, that's going to obviously cap our upside. And honestly, I'd rather see that stuff now than at 100K, 300K, whatever we go to. There's also a lot of people unloading who missed the last time to exit in the last bull run at a similar all-time high. Seeing that a lot on ETH, seeing that a lot on Sol, all these older wallets unlocking, right, to sell up here. And I think that's what we see typically at every all-time high. So it's not like anything new, but that's also going to keep us here for longer, I think. As far as the 4 hour, we've got this ascending triangle, which is very much alive, very much possible that we go higher. It's just it's a wait and see, right? If this, then that. The yearly pivots here kind of tell the story. I think 81-ish would be the upside target. And if we break down, it's like 52.8, basically the breakout from February. So that would be your downside protection, right? If we break 63, we may be headed to low 50s. But so far, in the moment today, as we speak, there is a bullish expectation for this based on the chart pattern in a vacuum. Some alt stuff real quick. Dominance still looks very, 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 very bullish to me. I'm right there with Ben Cowan, ICT Ben, who's been bullish on dominance for, God, months, years, I don't even know. This looks like it wants higher, and we could very well get that if alts break down in a bigger way when Bitcoin breaks down. If Bitcoin moves down 5%, alts could go down 10, meme coins down 20 to 50, and that might help push this higher. So this still looks very good. I'm
going to share my chart real quick just because it's funny.
Yeah.
Just check this out. I've kept up with this particular level since I marked it on the chart. 9/14/21. September 14th, 2021. This was back in all the Ethereum is the best thing since sliced bread, and Ethereum's the new Bitcoin, and like you suck and all this stuff. And so I like wrote it in stone on that day. Chat said that dominance will never come back to 60% because Ethereum is the best thing in the world. And this was like their prevailing attitude at the time. I did like a poll, and it was something like 70% of chat believed that. And here we are. Here we are. It's coming. All right, back.
I think so. Some of these things like ETH, which I think people continuously try to be bullish on, it's had a great run. Again, like all this stuff has had a great run for the past 6 months, and people just think like they want more. They want the BTC pair to be up. I don't know what they think, but at this point, if you've been in since November, you've had a great run, even on ETH, which has lagged Sol, it's lagged Bitcoin, it's lagged everything. So could this be an Adam and Eve up here over the past couple of weeks? Sure, it could be. It measures to basically the current local high. But other than that, there really isn't much to do here. This looks very angry, very choppy. The cloud says it still leans bullish. But again, the easiest trade is going to be any breakout above the bearish cloud, any bullish TK recross. So we don't have any of that yet. So that would be the next thing to watch. Do we get a reset of the cloud on ETH? Sol to me looks like SMCI and NVIDIA. It looks very heavy. It looks angry. It looks like an inverted Adam and Eve. Again, it's still bullish on the cloud, to be clear, but it looks like momentum is waning significantly. So much like January and February, to get all this resetting would be a great thing. for another move back to, you know, I don't know what's the all-time high of Sol. I don't even know, but
It's like 240 or something.
okay. I think it's going to be tough to get there with a chart that looks like this right now. I think it's going to be much easier to get there with a chart that looked like February, or again, you're getting this bullish TK recross. It also sucks for Sol right now that Sol's sort of falling apart. People can't really use it. Transactions are failing. And that's not going to help the case for Sol right now. Sol does best when the casino is whizzing and people are going nuts. And that's not happening. So until they fix that, this may be on ice for a little while. Last two I have here are MSTR. This is the long-term fib extension, barely grazed. So this would be like the Bitcoin 100K equivalent on MSTR from the previous bear market. And we shot way outside of the pitchfork. And so my argument here is much like the inverted Adam and Eve measurement, somewhere near 1,000 makes a lot of sense to me. And maybe the most important thing for MSTR would be the BTC premium, which is coming down pretty hard, but is still quite high, which is the measurement of their BTC reserve versus what the market cap of MSTR is. So I'm not a bull on MSTR up here. Last one, coin. Again, like everything in legacy, all I can see is bearish stuff here. I see double top. I see inverted Adam and Eve. If it breaks the median of this pitchfork, I would expect sub 200. You know, is it the end of the world? No. Again, this thing has had a crazy run over the past year, over the past 6 months, much like January, February, where it sort of regathered its strength. I think that's what we're going to see going into earnings for coin, which are when I don't even know. I think beginning of May. I don't know. But everything is fine, just maybe not as bullish as people want it to be. Last chart, WGMI, which are the miners. Mega turbo ultra chop on this thing. And maybe you want to add to positions at like 15, 11, 8, you know, if stuff gets very angry. But this is also not screaming anything in particular here, in my opinion. I don't know about you guys, but I don't really see anything on this chart. I know people are like crazy bullish miners, and I don't see it personally.
No. I
like WGMI above 20. I like miners with a massive drawdown just across the board. Otherwise, so sub 1450 maybe, like, I don't know. I just don't see it.
I think that's one of those you just got to let it flesh out on its own.
Yeah. All right, that's all I got. Whole lot of nothing is basically what I see across the board here. A lot of wait and see.
A lot of wait and see. It was good stuff. I don't look at the legacy stuff or the ETF stuff or that like ever.
Yeah, the one silver lining is Chinese ETF flows, which if they're good enough, they'll probably get shut down anyway. So I don't even know if we can like hope for that.
It's on you, China. Ball's in your court. All right, Schmitty, tell us about China.
Yeah, sorry. I have like a fucking million windows open. Making sure I don't dox myself.
Commodities look good here. Like I said, you know, if you're looking for stuff to trade, I didn't show up, but the copper chart looks phenomenal.
Did you see the cocoa chart?
Yeah, I mean, but that's...
Yeah, it looks like a fucking shit coin.
Meme coin, dude. That's crazy.
It's too late to trade that at this point.
No, I know. I just like, that's wild to see.
Yeah, it is.
All right. I think this is... Oop, shit. That was not what I wanted to do.
So always look first.
Well, just close trading view.
And all the tabs with it.
Yeah, that's exactly what just happened.
I love it.
Man had 48 minutes to prepare and still couldn't get it done.
I was making notes on my notepad the whole time.
I just wanted to hear you yell about Zoom windows. It's my favorite part.
That was me. Ah, here we go. Okay. All right. Can you see it now?
Yep.
Yeah.
Yep.
All right. So I'm going to start with Dixie. So this is the weekly chart, by the way. There's been this ongoing, it's a pretty uncommon pattern, but it is a pattern nonetheless, called a compound fulcrum. And it basically looks like head
Compound
and shoulder.
fulcrum. Hold on.
Yeah,
I gotta write this one down.
That's
Siri,
a Peter
what is
Brandt
a?
one.
Yeah, okay, that's a good
Yeah,
one.
there's
Go ahead.
not a lot of information about it, but it doesn't play out often, but when it does, I mean, it has pretty telltale signs of it, and it takes this form right here where it looks like a head and shoulders kind of thing, but it's on the bottom of a trend, and we see this sort of neckline take place. So where a normal head and shoulders does this, we have like an ascending or flat neckline. The compound fulcrum has like a curved sort of thing. And the entry signal on this is, if you were to trade this, is like when you flip the shoulder as support. So if you're looking at this as like a double shoulder thing, here's the support, and we've now flipped it. Granted, we have a couple of days left on the weekly, but when you slap B bands on this thing, this looks like it's ripe for a breakout. And if Dixie goes up, I think that is going to line up a lot with we're seeing on equities. So I'm in full agreement with everything Josh said, basically. I think that this looks shaky at best. And there's, it's just kind of just been cruising along, really. If no matter what trend metric you look at, it's kind of just been connect the dots in an upward fashion. It's not getting super overbought. It's not getting like really volatile. It's just kind of coasting up, which is really weird. We've seen that in the past before on this move, which was like, I don't know, back in July. We've seen it back over here post COVID. So it's not uncommon, but it's really hard to tell when it's going to snap, because when it does snap, it snaps hard. So here's an example of the last time, if we take the COVID example, right? So following the 2019 meltdown, it kind of just like cruised right on out, like nothing alarming or like, oh my God, that's going crazy. It kind of just like lulls people to sleep. And then before you know it, you're like, oh, we're up 20%, 15%, whatever. But then when it snaps, the consequence of this drift is that there's no real established levels of support. There's like a couple of these little swing lows, but none of these things ever get cleared. And so what that does in the market structure is it says everyone who's been long on this whole way up is placing their stops. They haven't been popped. So when they do get popped, it snaps hard in these big aggressive moves. And so I think that's kind of what's in store for the S&P. And that's multifold. So when I look at things like the weekly Ichimoku cloud, like there's huge deviation where we get this like C clamp structure, and we can see that like it's drifting up, but the mean is not really coming along with it. And so if this snaps and it gets like a little bit of a close below that, it's a pretty steep target, equities wise.
Terrifying.
Yeah. I mean,
absolutely terrifying.
If you're looking at it from like the crypto perspective, you're like, oh, 10%. We did that like today. Like that's not a big deal. But in terms of equities, like the amount of capital that comes down with that is huge. So if we get a 10% move, that is enough to throw, a lot of markets in turmoil short term.
That's basically back to the previous all-time high of October 2021.
Yeah.
Right?
Yeah. Like in the grand scheme of things,
it's not a big deal.
Yeah.
People are going to think it's like the end of the world.
It's only a big deal if you were late and you were buying somewhere up here. You were buying somewhere up here and you're leveraged. That's when you're gonna get these oh shit moments. Maybe you get like an oh shit wick that forms and keeps going. And because these lows have not been flushed, like I was referencing, that this is ripe liquidation cascade territory. And the same story is true on a lot of strong leaders in the market. Like, for example, we have NVIDIA here. It's no secret. It's been up only, right? This doesn't look like it's a lot of percentage wise, but it's up 100% on the year. Okay. And when we look at things like the Bollinger Bands, this is what tops tend to look like, where they slowly roll over. They're maybe trying to push new highs, and then they kind of just like, I talk about this all the time, but like the B band attachment, where like it glues to the lower or the upper band, and that's how new trends begin. And when we look at NVIDIA structure wise on the trend, again, there have been very little flushes of these lows. And so this is just ripe for mean reversion. And when we look at it on the weekly, mean reversion on the weekly B bands looks like the midline, which again, doesn't look like it's that far, but because it's up so much, that's 20%. So, there's a lot of reason to expect, and of course we see this detachment of the bands, which when you combine that with the curving of the bands, that just looks like, okay, trend is over. Time to consolidate or reverse. One of the two things is going to happen. Now, when we look at gold, I've been watching gold for fucking years at this point, like literally. And it has been the laughing stock of the crypto community because of people like Peter Schiff, who's just like perma-bear, and he's been wrong for multiple thousands of %.
Well, it's still laughing stock. Let's be honest.
Yeah.
It took 4 years to break out of a chart pattern. I mean,
it took 12 years to break out of this cup and handle.
The cup and handle, yeah. But the inverted head and shoulders.
But for people that have, more traditionally minded exposure, this is like a wet dream for them. And so if they see this like 12-year chart pattern breaking out strongly, when we look at gold futures, I mean, this thing has a habit of going on multi-year bull runs, right? So if we see a strong move in gold paired with an equities pullback, that is oftentimes, in like the traditional sense, a risk off scenario for riskier assets. And if you're risking off in equities, you better bet your ass you're going to risk off in crypto. And that's also what the charts are showing for crypto. So one more metal chart here. Silver has been a bump on a log for a while, and now we're seeing this head and shoulders
little catch-up trade opportunity.
Yeah, exactly. Yeah, and so silver does very similar thing, but it kind of it does it shorter but more intense than gold. So it's like, I mean, silver kind of is like the altcoin of the metals world, right? So all that to say is that this is screaming risk off event, and get into safer, more secure assets that have been in consolidation for literally years, decade plus. And if those are breaking out and that's showing strength, whenever we see capital rotation in markets, whether you're looking at Bitcoin to alts or equities to Bitcoin, it's like it sloshes, like the same amount of capital kind of sits in the tub, but it sloshes from one little pocket to the other over the years. And right now it looks like metals are really poised to have a strong move. And if they continue to be, showing strength, it's very possible that we just kind of see, maybe not a bear market in Bitcoin, but kind of just hangs out a little bit while, gold flexes. And then as confidence returns back to the market, maybe S&P 500 retests the all-time high, then we'll see capital return. But until then, it's kind of just like, it's in no man's land for equities, while commodities. So, Josh mentioned commodities. When we look at crude
wait, before we go to anything else, pull up COPX and tell me what you think about that chart. It's
COPX.
It says copper miners, but it follows the copper futures more than anything.
Ooh, interesting.
I mean, that looks like silver too. It's like not a surprise, but that chart looks phenomenal. That chart looks really good.
Yeah, so this looks like a reaccumulation trading range to me. This has all the so this is this is actually a really good chart. This has all the telltale signs of like what I would look for. This has the jump across the creek moment where you see like the large spread. But if I slap volume on here, it's probably large volume. I guessed it without even looking at the fucking chart. Large volume attached to it. This is screaming long the fucking shit out of me here.
Mm-hmm.
This play is
That's
a
a good-
really high confidence play that I is like in my system. This is like A setup. But this is the exact same setup that I was so confident about at the 42K reaccumulation. This is when we have the reaccumulation, we have this level that I call the POI, the point of interest, where like it can't break it unless it's impulsive, as really well established level. We see the final shakeout, and then bam, it moves up. So any close above here is like that's A territory. And this is how many years? Yeah, since February 2021. This is huge. And it's
Wow.
is this how far back this asset goes back? Because
Look at the retest of the last, like the 2017,
Yeah.
2018 high.
yeah,
Oh,
this year.
man. Yeah.
So that's
insane.
that's an 81%, rough estimate here is basically a new all-time price discovery for this thing. So
Wow.
damn, this is a really good chart. Okay, I'll have to keep a note on this one.
That's literally what I just had to write it down. Good shout out there, Josh.
But yeah,
Yeah,
this is like, if you're looking at bullish setups, this is like,
It's just
that
another
is-
reason for people who don't know. Like, if we're talking about commodities, we're probably not bullish risk assets.
yeah,
We're probably
yeah,
not-
exactly.
We're probably not bullish crypto at the moment, right? So I think the question is like, how long is this thing going to run? Is it going to be a quarter? Is it going to be like the rest of the year?
So for a reaccumulation of this magnitude, I would say at least till the end of the year. I mean, these things move slow, but it's kind of like whenever you see those like tidal waves and tsunamis happen, it's like the water rises and then people don't take it seriously, and then it just like slowly but surely washes shit away. That's what metals do. They just keep going, and you're like, okay, you don't really take it seriously, and then before you know it, you're like, oh fuck, this thing's up 40%. What? That's crazy.
Schmitty, that reaccumulation range could be argued to be a sign of strength as well for like a bigger pattern. Like if you zoom out more and using the bottom and stuff, that ain't bad.
This is actually a humongous double bottom too, by the way. Neckline throwback.
That's a great chart.
This is a sick chart.
Well, the reason I bring it up is because half the
Wow.
time, like people are talking about commodities. I'm like, okay, how do I express that viewpoint? Like, what do I do? Right. Another one for the DXY is USDU, which I don't think you can trade DXY directly, but you might be able to. But
No.
USDU is a good proxy for DXY. Anyway, go ahead.
USDU.
Yeah.
I've never
This
heard
thing?
of that.
Oh, this is just a product that gives you exposure to it, or what?
It's a bullish bet on the DXY as well as a yield on treasuries. So it's like you're kind of double dipping there.
Huh.
Oh, this is weird because it's so a lot of times with these ETFs where you're like a bullish or a bearish thing, there's always something going on the back end that makes it decouple from the trend. Because like if we look at DXY and we look at this chart, you would so going back in time, you would expect this to be something like this, and it's not. It's flat, and it's the same reason why like whenever you look at like bearish SPY ETFs, they don't go 1-to-1 with the bearish move. They kind of just tend to always go down over time.
Yeah. I mean, definitely do your research if you're getting into any of this stuff, because it's not
Yeah.
as it seems. But
yeah, I haven't really looked at the mechanism there that makes that happen. But even when you look at their product, they warn you. They're like, this is for short-term hedging typically.
it's one of the reasons why something like BitX, which is the 2x Bitcoin ETF, is just going to slowly bleed over time. You've got fees, you've got futures roll, you've got all that stuff. Whereas here, this is like some sort of dividend reinvestment and like splitting and blah, blah, blah. I don't know. Anyway, just something else to think about.
The RSI gives you good entry signals on that, by the way. Just back tested.
So we'll talk about here. All right, I got my
Hey,
notes
chat's
here.
asking
Subtract from-
about, do you guys know anything about like copper going up and war, something like that? There's a lot of like chatter about that. I don't know anything about that. I've heard like little rumors about it, but I don't like know anything, for sure about it.
I don't know anything about that.
I need to listen to 50 macro podcast before I can speak about copper. I know nothing about copper.
The only thing I remember hearing is like there's this famous example. I don't remember what it is off the top of my head, but somebody saw that copper was trending up in a macro fashion, and they predicted war. And what it was like some country was on the down low, buying bullets, basically like preparing for war. So they were stacking, and it was having an effect on the global copper prices, just in a even though they were being stealthy about it, that was like kind of what tipped their hand. And then next thing you know, it happened.
Weird. Okay. Yeah, and then the one other thing, I'll point out some other tech stocks that typically have been strong movers. This is a monthly chart, so keep that in mind. So this is Apple, right? We have this double, very clearly. If we go to the weekly, it's
garbage.
Yeah, it looks like dog shit.
How dare you?
And we see this double top, very clear edge to edge setup. But when we look at the monthly, that also coincides with, the fuel that will break us out of this double top, which is this C clamp thing. So all in all, things just, they don't look the best. If you're a Bollinger Band trader, this also is a 3 pushes to a high setup, where we see 3 pushes to a high all around the same height. But when we look at the percent B, it is getting lower and lower. And if this closes, you have 20 days left on the monthly candle, but if that does, target of this thing is the lower band. So you have to ask yourself, it's like, okay, we had all these things. Really, we only had a handful of things that were propelling SPY along. It was like what, like 4 stocks or something like that were shoving S&P 500 upward. And if those parabolically blow off, well, that's going to take a lot of things down with it. And so,
well, the funny thing is the same thing with IWM. IWM is led by MSTR and SMCI. and if they lose that, everything else is already red,
Yeah. And like when you look at the Dixie chart, it's like, I want to be macro bullish on Bitcoin because, I'll
Halving
pull that
and
chart up
stuff.
now. Yeah. So can you see this chart?
Yeah.
My Bitcoin chart? Okay.
Uh-huh.
So on the, here, I'll pull this up too. All right. So when we look at things like the Doge chart, stuff like this worries me. Okay. We had every time we're in a situation where I say, oh man, the market conditions are ripe here for continuation, and they don't, I sit there and I'm like, well, why? Why aren't they continuing? And look at Doge USD. So Doge is, you're probably asking yourself, why the fuck am I looking at Doge if I care about Bitcoin? But Doge is like kind of the canary in the coal mine in terms of like, or historically it has been. Maybe it's changed a little bit because of all of the meme coins and Solana and stuff like that. But in my mind, this is the OG. It's been proven to be like the canary in the coal mine in terms of like risk appetite for higher risk bucket assets like alts. And it's slamming into resistance. Okay, that's not that big of a deal. It's not the first time we've done that. But when we look at the monthly chart and I see it closing outside the Bollinger Bands and it's not continuing, and I look at the daily chart and I see things like this where it's like, okay, it could have continued. Okay, cool. We just corrected. Oh, look, continuation signal. It's not correcting. Oh, we're going back to the daily midline. Like this stuff is like, this just shows uncertainty in the higher risk asset market. And when we throw on the chart for Bitcoin, it doesn't look much better. It looks like the uncertainty and Doge is kind of front running uncertainty in Bitcoin. And, I've been no secret here that I've been like turbo bull, but this is making me kind of change my tune here. When same logic applies when I say, okay, the conditions are right for a continuation. This should be bulls on parade, and it's not.
Mm-hmm.
I have to ask myself, well, something else, what's going on here? Because we had a month and a half of consolidation in a humongous pennant. We saw its we saw a massive breakout, but it ran liquidity and rejected. And I go, okay, well, that's sketchy. Maybe this is just a throwback to the retest, here. And it dunks below. This looks like a bull trap to me. This has all the smellings of a bull trap. We ran liquidity. We broke out on super low volume. We trapped the breakout traders. This is like, if I'm looking at this objectively and I'm not considering the halving or any of that other stuff, like this is something that I would, with a really high confidence bias, be targeting this low down here. And when we look at historical evidence of this, like this happens a lot on the lower time frames, but I know most people here aren't like day trading or swing trading. They're probably just looking at higher time frame charts. This happened in the last bull market while we were topping. Okay, we had this like really clean pennant. Let's go back in time. And it did a double fake out. Okay, so this was a bearish pennant, which the expectation was continuation. It broke out to the top. So if you're a pattern trader, you okay, this is a symmetrical triangle. It's breaking out. It's going to the upside, and it trapped. And the very next thing it did was it ran this low. Right. Did it continue from there? Obviously not. It reversed. When we take the replay off the chart. All that to say is that anytime we have these bullish setups, whether it's an Adam and Eve double bottom, it breaks out and it closes back below the breakout point, this has a really, really high likelihood of clearing the low. Same thing with head and shoulders. If we see a head and shoulders breakout and it closes back inside, especially if it flips the shoulder, has a really, really high likelihood of clearing the high. And so I go, okay, that's interesting that it's doing that. Is there anything else in the market doing that? And the answer is yes, unfortunately. So
Like
when we look at, yes, everything has failed continuation or reversal patterns. Ether, world's largest double bottom. It did it twice. Okay. This was an Adam and Eve double bottom, clear as day. It broke out. It didn't run to the low, but it did run the liquidity of the shoulder. And then it made, once again, another Adam and Eve double bottom, broke out, cleared the liquidity, and dunked. So all of this is just like, these look like liquidity games. And this looks like the kind of thing that you do when your goal is, it doesn't necessarily mean distribution, but what it does mean is it's probably part of a larger trading range at minimum, and has a really high likelihood of slamming into liquidity zones, which is, down here is the most obvious level, especially if Bitcoin, breaks out of its triangle and comes back down. It's probably going to target that, which would coincide with this. We look at things like Solana. So we got Solana. What's it doing? Okay, well, no secret here. Had a failure of a pennant. It didn't even break to draw the line. It didn't even break to the upside. It just broke to the downside. However you want to draw this, like you could draw this as like a descending triangle. There's a million ways to draw this, but point being is this has downside target of pretty steep. If we do just a conservative target of this, so $47, I mean, that's coming down to the low 100s. Maybe look at it like an Adam and Eve, whatever. Just pick your chart pattern. It's there. So this is just giving me really, really big pause. If we look at like the Bitcoin Bollinger Bands on the daily, which has been a really great trend indicator, it's still consolidating. Okay. It's not saying, okay, short, your net worth yet. But if this thing continues down, oh, by the way, I've left out the fact that yesterday's failed breakout made a bearish engulfing candle after sweeping the liquidity. Like that's a big red flag and sad face on the chart. But if we get a close down here on this lower Bollinger Band, that's likely going to be a reversal of the trend. How deep that reversal goes remains to be seen. Like maybe it's something like this and it just kind of like peters down and then reverses. But all that to say is that if your expectation is, new girlfriends and Lambos, this is not the market that's inspiring the most confidence. You have Dixie potentially breaking up. You have equities just looking so weak. You have gold and oil and everything else looking like they want to go up. Like this just doesn't look like it's the time. And everyone's been operating under this assumption that like, okay, halving is approximately this Friday, next Friday, somewhere down here. It's just up only, and that's just not been the case historically at all. In fact, a lot of times after the halving, we kind of just like do nothing. Like we'll come down here and just wait, and then we come up like 2.5 months later. So yeah, all that to say is I am not optimistic about this sort of deal here. I am very heavily targeting 59K as like a downside target. Yeah, what else do I have on my notes?
I think having like in the 30s, imagine like high 30s, having after the halving would make for great headlines. That's all I'm saying for liquidity. Price halving at the halving.
30.
Yeah.
Come on.
Yearly pivot's
about
36.
The
I'm just
30s
saying.
would be
I'm just
insane.
saying.
Again, it would have to take a biblical meltdown of legacy. It would be a COVID style drawdown. That's what it would take. Other than that, there's just no chance. No chance.
Yeah, there's I mean, if you go to,
I'm talking like 38. That kind of like the high 30s, not even like 30
No.
itself. That's a 45. We've seen a 45% drawdown before. It's not like that's never happened.
It would take millions and millions of outflows from the ETFs. It would take legacy completely collapsing, and it would be a COVID style event.
I mean, it is possible. I don't think it's going to be this.
No.
But I mean,
Trade its way
if
there.
you're looking at it like, okay, well, what happens if Dixie breaks up? Well, historically, that means Bitcoin goes into a fucking bear market. What happens if Dixie goes up? Well, historically, that means equities go into a bear market. If we look at NVIDIA, which has been like, god damn, is it's back heavy. It's been carrying everything with it. This thing's just been up only forever. And if we look at monthly B bands, that's what I want. If we look at monthly B bands, like this thing could mean revert down to 418, which is a 50% drawdown.
Same with MicroStrategy too, Josh. Remember we were talking about that? That it's target-esque thing is like 1,000.
Yeah.
From 1,800, 45.
Yeah, I mean,
percent. That's not crazy.
Weekly midline is 890.
And there's so much cultish money in MSTR and the miners. By the way, the miners are like insanely cultish, but MSTR as well. So I would love to see that get rinsed because just like the meme coin stuff, it's all dumb.
Yeah. So all that to say is that it's very possible that like there's this halving narrative. So the halving used to be like, I think that the narrative is too, people know about the halving too much. Like
sell the news things, what it's turned into.
Yeah, well, I don't know if it's sell the news because it is by default fundamentally a bullish event because you're cutting supply in half or new, mint in half.
You saying it's priced in, bro?
All I'm saying is that I think a lot of people who were betting on the ETF weren't buying here. They were buying here. Like you were saying before, like people that were in the know, the smart money were buying here. All of this is just icing on the cake for anyone that was long down here. So, I mean, if shit does hit the fan, which, I mean, Bitcoin has been known to do from time to time, I'm not saying that like I'm expecting anything like just straight down, but like, dude, if we break that pennant to the downside and we get a Bollinger Band, a daily Bollinger Band attachment, like mean reversion target on the weekly is 52K. Maybe it wicks through or whatever, but like, what does a monthly look like? I mean, monthly still looks bullish as shit if I'm being honest with you, but
Yeah.
And hear me now, quote me later. Anything below 60 is going to take a massive, massive effort. And it's going to be because of outflows from the ETFs and legacy just collapsing.
Oh, for sure. Yeah. So like if you're trying to like, I don't know, game theory out like what the move would be that
The market hears me, by the
gets
way.
us there.
We're almost back to 70.
Easy.
Yeah. I think a lot of this is short liquidations, by the way, because of people shorting.
Here we go.
That sounds like bear cope to me.
I mean, wait and see if this closes below. Like that's the trade I'm looking for. That's why I was so quiet. I was so staring at this chart. I was like, okay, what's it gonna do? But anyway, so all of that to say is that there's the conditions are there for something like that to happen. And I definitely agree that getting the market to trend below 60K is going to take a lot. But the seeds are planted, and that doesn't seem impossible to me. That's all I'm saying. I'm of the camp that like, okay,
How would you take the probabilities on that? Like, what would you do? Would you be looking to short sub 66? Would you be looking to hedge sub 66?
Sub 60.
I
Why
just say
66?
66 because of the diagonal support.
Oh, like if it breaks this?
Yeah.
Yeah. So I'm of the opinion that I mean, maybe I'll be proven wrong like on stream and this thing just breaks out. But anytime we have these chart continuation failures, these are such high percentage that like I am only looking for shorts right now. Until we get back above this thing, I'm only looking for shorts. I would not feel comfortable shorting this just because it's the thing with trading low time frame short positions is they very clearly get whipsawed. I mean, as we saw today, like this is crazy. Huge percentage move. This is 3.5%, which if you're on leverage is huge. So I wouldn't feel comfortable shorting anything here unless we get like a 4-hour close that's like somewhere down here, maybe. But if we break this, this is the more interesting level for me to watch. If we break this, I don't think it's this and this. I think it's this and then this and then this and then that and then bam.
Maybe even like a
that would-
retest of that upward diagonal before the eventual sell off. Like
Yeah,
after
maybe on like the
breaking-
super low time frame. But so
Yeah.
exactly like what I was saying on SPY, we have so many unswept lows here that this is just ripe for just like unzipping the market, clearing it out, and then bam. So I'm definitely not in the camp of this being like distribution. I'm more of the camp of like we have a continuation failure, and the logical extreme of that is everyone that longed this has their stops here. So clear them out.
I think if we drop like that, it's going to be like an SVB situation where stuff's blowing up, the Fed steps in, and yeah, it gets bearish for like a day. That's it. And that's it. FDIC randomly came out today and said if a big bank blows up, we're prepared. So like, why would they say that?
Wait, what? Yeah. Huh?
We're not saying that a big bank is going to blow up, but if one were so inclined.
Bro, nobody asked. Why are you bringing that up?
Yeah.
But all that to say, like from here down to there is like objectively not a big drop. 15% is like, that's normal, especially in strong bull markets. Like even when we're in these crazy parabolic markets, like 15% is like, that's nothing. That's like, we do that all day. Like complete retrace.
Yeah.
Complete retrace. Like that's nothing.
I just think it's going to be hard to keep us down. I think it's going to be easy to try to push us down. I just think it's going to be hard to keep us down. That's all. And that's
for
not
sure.
Even
for sure.
That's not even a judgment on having. Having historically, like you said, like hasn't really mattered until 2 to 4 months after having. That's when the the important part.
That's
to
why
see.
I think this is also beautiful. If this really is some sort of even low time frame distribution or something, right? Like a reset, whatever you want to call it. And then it gives the quote smart money a good opportunity, a good buying opportunity on the cheap. And then the actual like reset, if you reset nothing else, reset sentiment. Because I have heard so many like from friend groups that I don't even hear from anymore, and they're all talking about buying for the halving and stuff like that. Like, and it's like
That's what I'm. Yeah, that's what I'm talking about. Is I think that alpha isn't right anymore. It's like
I need them scared. I need them texting me like, dude, this is so stupid. I sold it all. And then like, that's my indicator. There's one friend I have in particular. He only shows up at tops. He's like 5 for 5.
Well, hopefully he stays disappeared.
No, he showed up. He showed up like right when I was
Damn it.
like getting that smell of distribution kind of early, like a few weeks ago. That's when he showed up.
All of the, speaking of the other side of the coin, the institutional side, all of the Wall Street people I'm hearing are still completely bearish Bitcoin.
Oh,
Still
really?
completely disbelief. Nobody is on the side of bullish continuation. Literally no one on the Wall Street side.
well, I think they're probably feeling that way because of the way that Wall Street looks right now, and they're like, if we're not going up, you're not going up. So
I just think they've never understood it and they never will understand it. They just can't, their mind can't process why this thing is bullish.
Yeah, but
so all they will ever see is the bearish side.
you're not considering like the ETF folks in that crowd, right? Because I've only heard up only from them.
No, not like Bloomberg or any of the news guys. Any of the random like Wall Street facing institutional people are very, very bearish Bitcoin still.
As in they're shorting, or they're just like they don't care, like they're disinterested.
No, they're not shorting, I don't believe. They're just very much saying like, I don't want to talk about this. This is pointless. It's dumb.
Yeah.
This has no bearing on anything I do, or whatever.
All right, fair enough.
But
yeah, the other chart, the last one I'll talk about is the CME futures.
oh god, not this again.
Not this.
Gave me nightmares last time.
Oh, the head and shoulders. Yeah. So the CME futures chart actually objectively looks better than the spot chart.
It does.
It even had this nice little gap fill, which is very kind of it. But when we look at like the daily close, it was an inside candle rather than an engulfing candle, which is more bullish. I mean, obviously you don't want to see this much red, but it's definitely more bullish than a full-blown engulfing like this, right? But all that to say is when we look at the futures, the CME futures chart, I mean, it's holding the midline. That's cool. What'll really make me flip my bearish skepticism is if we close up on this upper band. That's continuation station all day. I've talked about that ad nauseum. Sometimes you get things like this, like it fakes out, but like, in general, attaching to the upper band is a harbinger of good things to come. Yeah. And so, yeah, like if you want to ignore all the low time frame noise, you're like, I don't care what this carrot's talking about. If anything, just look at this. A close on this upper band is bullish all day. 4-hour chart is like pretty choppy. It's not really terribly insightful. But when we slap the EMAs on there, like looks fine. It's holding the 50 EMA well. The closes on CME futures are a little weird. So like they're not the same cycle as spot because it has like off hours. And so anyway, long story short, we got 40 minutes left on this. Well, technically it's 30 minutes, but my chart is delayed because it's a futures chart. But we have 30 minutes left, and this thing could close a big fat bearish or bullish engulfing candle on high volume. And if it does, like, especially after closing this gap, like that's cool. This looks like a giant bear trap potentially. The only thing I wouldn't want to see is like this sort of thing where it closes up there. So like if we look at the spot chart, like this reeks of a liquidity grab on the low time frame. And literally the only reason why I'm not shorting this right now is because I'm on the stream. But this is,
I already
especially
did.
when it's like pre-market, we see this drop because of CPI, it retraces it, and it's like, okay, well, it's hunting all of the pre-market shorts, stops are all appear, failure to continue. That usually means that. But it remains to be seen. I'm just rambling at this point. But I think I got one more thing on my notepad. No. Bullish failures on alts. Yeah, so to recap, because I know I talked the longest, but metals look so bullish it hurts. Dollar looks to continue to devalue your hard-earned capital as it goes up. Inflation was a little bit higher today than expected, and equities just look rough. So if you're looking for exposure to something that looks like you can throw your money at it and just walk away for a year, metals look like that all day to me. Like that's like I got paid on Friday, so I'm taking 5% of my paycheck and throwing it at it every week kind of deal for me.
I like it. Not bad. Not a bad financial advice.
One
That's
last
it
thing
for
to
me.
check too. One last thing to check is all of these charts relative to BTC, because there may be some signal there, not just today, but like going forward. Gold versus BTC, COPX versus BTC, whatever.
So gold versus Bitcoin. I don't know if do you follow Peter Brandt?
Yeah.
Oops. Gold versus Bitcoin is really interesting. God damn. Because, dude.
Just do XAU USD divided by BTC USD.
I need a rage compilation of Schmitty.
Yeah, but don't you have to? Okay, whatever.
Nobody help him. Let him freak out. This is gonna be
That's
good.
it. You can just hit enter. Yeah, there you go.
All right. It's making a giant Head and Shoulders. Head and Shoulders.
I don't know about giant.
It's
There's
gigantic.
something.
What do you mean?
The ascending triangle over Head and Shoulders.
How,
But yeah, look, all I'm saying is
what do you
something worth
mean?
adding to your.
This is the cleanest Head and Shoulders bottom ever. What do you mean?
I don't know about that. It's trying to bottom. I'll give you that. And I would all I'm saying is if you're somebody who's rotating in and out of this stuff, it's worth checking these charts out. The relative value charts.
Mark my words, gold will be the new reserve
Gold's the new
currency of the
gold.
United States.
Gold's the new oil.
Gold's the old Bitcoin.
So you're saying Trump's gonna win and bring back the gold standard? That's what you said.
Yeah. I think Peter Schiff was onto something.
Heard it here first, folks. Schmitty, because you were talking and I wasn't, I got my 100x short at 69,825.
Hell yeah, dude.
We'll see how it goes.
I think that's it.
All right.
Thanks, everybody.
We did it, guys.
Bye-bye, folks.
We did it. Market power hours. No, it wasn't that bad.
It was
hour 0.5.
Hour and a half. I think this little rally was a nice little retest of support turned resistance. So we shall see. Just my 2 cents here. All right, everybody. Thank you all for coming in. Any guys, y'all have anything you want to show? Josh, I know you're doing like regular YouTube content. You want to show that real quick?
Sure, yeah. YouTube.com/CarpeNoctem. Twitter, CarpeNoctem. Threads, if anybody's got threads.
What the hell?
Shout out
what is Threads, dude?
It's the Facebook Twitter.
Oh my gosh. Okay.
Just because there's less bots at the moment and there's more signal. That's why I like Threads.
Is there less bots because no one's on it? Like it's a...
I think that helps, yeah.
It's a ghost town. All right, guys. Big love. Carpe what? Says chat. Say it again. Carpe Noctem.
Yeah.
Do you have to spell it? Are they different on each thing or are they all spelled the same?
No.
Okay. All right.
Same name everywhere.
This name.
Branding.
All right, guys. Thank you all, chat. Big love to you all. Y'all take care. Gentlemen, thanks for your time.
See ya.
See you guys.
Thanks, boys.